This one, no? So that you can see the...
Good morning, ladies and gentlemen. Welcome to Photon Energy Group's presentation of the Q4 2022 and the full year 2022 results, and to the call. Clemens Wollmuth, our CFO, and myself, Georg Kotter, the CEO of Photon Energy, will run you through the presentation today. We will quickly go through our business model and introduction of the company. We will do this a little bit shorter than usually, as most of you, I think, are by now very familiar with our business model, but we will spend more time on explaining the impact on our business model, stemming from the integration of Lerta at the end of last year. We'll go through our strategy, and then Clemens will walk you through the financials and the outlook for 2023. Of course, we are open and would like to encourage you to ask questions, which we will try to address at the end of our presentation. So just a very brief intro and overview. So we have been in business since 2008. So we've recently celebrated our 15th birthday. We are a Dutch company headquartered in the Netherlands, and after the acquisition of or integration of Lerta, our total headcount in terms of employees has grown to over 280. But in certain functions like sales, we also have contractors, so that number is well over 300 at this point in time. So if you compare that to the numbers we had a year ago, there's been very significant headcount growth organically since the beginning of 2022, but of course also through the integration of Lerta. So we are a much bigger organization today. We're publicly listed on the Warsaw and Prague stock exchanges on the regulated markets, and our shares also trade on the open market of the Frankfurt Stock Exchange. We have 3 research houses covering us, all of them with a buy recommendation and price targets, which still provide for a certain headroom against current levels. And last but not least, we are also an ESG rated company, having received a sustainability rating from IMUG, which has also provided the third-party opinion on our green bond that we placed for the first time at the end of 2021, but have tapped a few more times last year. In terms of the headline numbers in our business as of the end of last year, respectively as of now, we have a project pipeline, project development pipeline of over 900 megawatts, spread across Poland, Hungary, and Romania in the CE region, and Australia. We have to date built over 120 megawatts, the majority of which for our portfolio, which still stands at 91.9 megawatts. However, we have 31.5 megawatts essentially almost completely constructed, and we expect to be connecting those power plants in the next couple of weeks to the grid, when it will start feeding electricity into the grid and generating revenues from sales into the day-ahead market. Last year, we managed to produce 121.6 gigawatt hours, which is an increase of almost 20% compared to the year before. And the headline numbers for Lerta are that in its virtual power plant, 290 megawatts of generation assets and energy users are aggregated. And one of the key activities of Lerta is providing flexibility through demand-side response services in the Polish capacity market, where this year 134 megawatts have been contracted. At the end of last year in December, we succeeded in winning 157 megawatts for the year 2027 in the so-called main auction, which always happens slightly more than 4 years before the year in question. Here the next important milestone for us will be the auction, the so-called additional auction, which happens about 9 to 10 months before the beginning of a given year, will take place in mid-March for 2024. And there our goal is to it will take place on I believe on the 15th of March, and the goal is to increase significantly our business volume in terms of contracted DSR services from the 134 megawatts provided this year, and our stated goal is to get to at least 300 megawatts. So we'll see how the auction goes, and what is important to point out that this is a very stable revenue and contribution margin block for us going forward. And last but not least, we also have our water business line, which has also been growing last year, and I will also provide a little bit of an update on our activities in the area of in situ remediation, in particular as it relates to the remediation of PFAS chemicals. So our presence is spread at this point in time over two continents, that's Europe and Australia. As mentioned before, the pipeline is over 900 megawatts. We have been able to increase it last year, and we definitely in those markets where we already have a pipeline, plus also countries that we have currently under observation or where we're looking for opportunities. So we believe that there will also be some additions in the next couple of quarters. In terms of installed assets, we have 15 megawatts in the Czech Republic, 10.5 in Slovakia. In Hungary, we stand at almost 52, 14.6 in Australia, and the 31.5, as I mentioned, should also come online in the next couple of weeks and months. So basically, until the beginning of Q2, we expect all of these power plants to be connected. Last year, we also managed to grow our operations and maintenance business from slightly over 300 megawatts at the beginning of the year to 380 megawatts at the end of last year. And this has been to a very significant degree driven by our success in gaining a strong foothold in the Polish O&M market, where we have managed, where we started at 2 megawatts at the beginning of 2022, and by the end of the year, we had signed up close to 100 megawatts, of which by year end we had taken over into operation slightly less than 70 megawatts. So we've really gone from virtually zero to already a very sizable number. And this year we see and expect continued growth in Poland. Of course, our own power plants that we are now connecting and still plan to build later this year will also drive our growth in Romania. And we also see there a lot of potential for third-party business, but we also believe that we'll be able to add customers in the other parts of the region. The important thing here is that we are most likely the only O&M provider that has a coverage of this core region in Central and Eastern Europe and can service investors into PV assets across this geography. I already mentioned the new energy division, which is essentially Lerta, which we combined post-integration with our behind-the-meter division or business line. And what we have is energy trading licenses in 6 countries, so Poland, Hungary, Czech Republic, Romania, and Slovakia. So exactly those markets where we have assets, and we're also trying to launch our develop our comprehensive behind-the-meter services, plus Serbia, which at this point, however, we have not activated yet. I mentioned already the asset or the demand-side response aggregation, and here again, the auction in March will be a very important pointer for our success in growing that DSR business in Poland, and we strongly believe that we'll be able to increase our market share and also beyond 2024 to keep increasing the volume of DSR services provided at a steady pace. So a few more words on that integration of Lerta, which happened mainly in the fourth quarter of last year, and was finally concluded on the 1st of February this year. So after having in two successive rounds in 2020 and 2021 acquired a 24% equity stake in Lerta's previous financing rounds, we in the first step, or in the next step, bought out the other financial investors in Q4, which raised our stake to over 60%, and then in the last step we bought out or took over the shares from the two founders, who, and that's very important, remain in their key roles in the organization. And for technical reasons, there was again split into two parts. So by the end of the year, we had 85.6, but as of 1st of February, we have taken over 100% of Lerta's shares. And I think on the next slide we can see and best explain the logic. So we as Photon Energy have had an asset-based business model where, of course, we're also providing a lot of services around the inception of these assets in the form of project development and engineering, and then procurement of components and construction. But an important part of our business has been our own investments into photovoltaic power plants, which we always invest in with a view of holding them forever. So we are not, unlike some of our peers, in the business of creating those assets and selling them off, but we hold them for long-term ownership. And through our NEM division, and again, there's very specific services starting from our monitoring software and our control room, all the way to specialized inverter services. We provide a very comprehensive packages for keeping these assets operating at the highest possible generation level and for the longest possible time. So that business model, of course, I think it has worked relatively well. However, of course, what we have been seeing more and more, and in particular as we have now over the last 2 years embarked on our new strategy of our new merchant strategy, where we are selling the electricity generated by our power plants into the markets. So in Australia, that is the spot market. In the CE region, that's the day-ahead market. Of course, we have entered into a process where we have had become, and that's an ongoing process, more savvy how to use that electricity, how to get the most out of our assets. And as mentioned before, we have invested into Lerta already some time ago, and over the last 2 years, we have been sharing a lot of ideas and formulated a vision reflecting the reality in the market that in our business model we have to forward integrate. Lerta came from the other end, so the goal has always been to become, well, ambitiously the largest asset-free utility in the world by managing efficiently the energy assets, but also the energy consumption of third parties based on software and services without actually deploying capital. I would say the catalyst for us, but also for Lerta to see beyond our respective business models has definitely been the growing importance of energy storage, which on the asset side is in some countries becoming a requirement. So it is already in some countries very difficult, like Australia, or it will be required very soon to integrate storage into renewable assets. And at the same time, Lerta's business model of providing flexibility, providing balancing services is made a lot easier if you also have energy storage assets in your mix, and if they're fully owned and fully controlled, it's becoming even better. So we've basically formulated a joint vision that if we bring our business models together, we actually become a truly fully integrated energy company that can meet the demands of a very wide range of customers. So through the demand side response, all of a sudden the Polish TSO, and very soon also the Czech TSO, and over time also the TSOs in the other countries where we operate, but also beyond, as we're definitely in the process of analyzing opportunities in other countries. So DSR and other flexibility services are in high demand, and that demand is going up as the share of renewables in the energy mix is growing rapidly. At the same time, in many countries, also baseload is being retired, whether that is nuclear or coal. So balancing the grid is becoming ever more complicated. So the demand for flexibility and ancillary services is growing rapidly, and the demand side response is one of the most efficient answers to that, and particularly the flexibility, as it entails very little, if any, capital deployment. So creating new generation capacity or building new power lines first takes time, but also requires significant capital deployment, whereas DSR is a way how to use the grid that exists and the generation assets more efficiently. So this integration puts us at the forefront of developments in the energy market, and provides us with a much wider range of activities, customers, but also growth opportunities. And our teams are now working jointly very hard to identify all those opportunities. It's actually a long and growing list. But just to provide one example, our operations and maintenance services can, of course, be bundled for PV. Power plants can be bundled very nicely with market access and balancing services that Lerta can provide in the markets where it has energy trading licenses. We can also use, to a certain extent, solar power plants for ancillary services. So we can provide much more comprehensive value-based propositions to existing customers, but also many new potential customers. And so what we've done is we have created around Lerta and our behind the meter activities our new energy division, which is focusing on providing medium and large energy users. So we're talking about business to business, ranging from commercial energy users all the way to large industrial customers, with a comprehensive suite of services. So the world has changed very significantly for energy users, particularly in Europe over the last 18 months, with this very high level of price volatility. I mean, and a very significant peak in prices during the third quarter last year, to the point where many energy users have found themselves in a situation where they were not even able to contract electricity. And in the past, they were used to signing 1 or 2 year contracts at fixed prices. And during these periods of very high prices, many energy suppliers were not willing to sign these contracts. Even today, it is actually still very, very difficult. And So they found themselves buying electricity in the day-ahead market, which of course is a completely new experience. Here, for us, the fact that we are in Australia, where, as I mentioned before, there's energy trading happens in a spot market where prices change every 5 minutes, and a surprisingly large number of commercial and even industrial energy users actually procures electricity in that spot market. These companies had to accustom themselves to that. So they had to become what I would call smart about how they procure, but also how they manage their energy needs. So on the back of these price developments here in Central Europe, what we've seen is that as a first reaction, starting actually from households all the way to large industrial users, at this point, I would almost dare to say an unlimited demand for the installation of PV systems on roofs or next to factories, and we are increasing our capacities to meet that demand, which very often, from our point of view, would be only the provision of EPC services, so building those installations, providing the operations and maintenance. However, in this journey from to be actually successful and maybe even create a competitive advantage for those energy users, it is important to go further, and that will definitely more and more include the addition of storage capacity to those PV systems that are being installed, which already increase the flexibility when electricity is bought from the grid or certain services provided back to the grid. But of course, the next step is also to find ways how to make the energy demand in general more flexible. So energy management services will become in high demand, and we want to present ourselves and as a partner for these energy users in this journey, so that we're not only perceived, because with solar installations we are competing with solar installers who all they actually provide is the installation of a solar system, and that's where it ends. But now with the combined capabilities, after the integration of Lerta, we can actually help those customers develop a strategy and help them implement it, and really get them to a point where they're able to procure electricity at the lowest possible cost, and on the back of an increase in the flexibility of energy consumption, but also then the download from the grid, we can sell flexibility back to the market. But also particularly if there are batteries installed, we can also provide ancillary services to the grid, so that energy is not only a cost factor, but can also provide revenues to those energy users and significantly reduce the overall energy costs. So these are very exciting times, and we believe that we are now in a position where we can address and succeed as a still small and nimble player in this new market reality. And given the fact that we are on the ground in 4 major markets in the CE region, here it's important to mention that we are also in the process of rolling this out in Australia. So we're in the process of obtaining an energy trading license. We are developing the demand-side response product and service for the Australian market. So we're also deploying this business model in Australia, and as time develops, and in particular as mechanisms for the procurement of flexibility and ancillary services materializes across Europe, and we see that there was a first auction for flexibility in Spain recently, with very attractive conditions for the providers of demand-side response services. This is a very dynamic time, but we see many energy markets, some of them next to our core markets in the region, but also some further afield, which may lead us to entering these markets with services based on the virtual power plant of Lerta, most likely initially in the form of demand-side response, but then also additional services. But we're not only looking at Europe and Australia, but we're also monitoring developments in other parts of the world. And with this change in the energy mix, the demand for flexibility is skyrocketing. So on that basis, I would hand over to Clemens to run you through our financials and the outlook. And then, as mentioned before, we'll be looking very much forward to your questions. We have already received one. I hope we'll have more very soon.
Good. Thank you, George. Good morning from my side. I will walk you through now our financials for Q4 22 and the preliminary numbers for the full year of 22. Let me just recap briefly what the main milestones that happened during this year that are reflected in our numbers. As we have presented in previous quarterly calls, we switched the majority of our portfolio to the merchant model, which mainly started with the Czech portfolio, where we have the possibility to switch from a feed-in tariff to a green bonus scheme, which allows us then to market electricity ourselves, as we have done from 1st of January. And with the opportunity in the Hungarian market, we also switched the majority of our Hungarian portfolio, 43.5 megawatts, to the merchant model, also with the possibility for most of it to return to the existing feed-in tariffs after 1 year, which the switch happened as of 1st of April. So this year we can return if merchant prices would be below the feed-in tariff, which we cannot foresee for the time being out there. We have grown our portfolio a little last year by commissioning 1.4 megawatt in Hungary as well, a merchant project, our second merchant project that was intended from day one or from the scratch when we developed it as a merchant project. On top of that, it's not that we have been lazy on that side. Last year we have built or started construction and basically finished also in Romania 31.5 megawatts, which, as George mentioned just before, are under the commissioning process now. So we hope to have them added very soon to our portfolio, growing it from the 92 megawatts today to 123 megawatts very soon. We got research coverage last year, starting from Ulster Research in Germany, Wood & Company in the Czech Republic, and IPOPEMA in Poland. All of them, as we've seen before, giving buy recommendations with a consensus close to €4 for our share. So there is quite some head up in there. Coming back to the financing side, we have also seen some major milestones on our financing structure. We have refinanced our Czech portfolio last year, which was fully equity financed at that time, where we could get 28.1 million additional liquidity from that portfolio. We have tapped our green euro bond that was issued in 21, end of 21 originally, by 22.5 million in 2 steps, to 77.5 million. On the other side, we fully repaid our previous bond that we had outstanding, which was since 27 issued and was due on 27th of October 2022. So we have proven our track record with the, at that time, second bond issue that we had out there that was now fully repaid. On the business side in Australia, we also were quite successful by not only further developing our existing business there, but acquiring a very interesting 9.8 megawatt project, which is a hybrid project combined with 10 megawatt hours of solar, of battery storage. This is for us, not only from the Australian market, an interesting project, but especially going forward, also for the European market, where we can see also the importance of battery storage becoming increasing. We intend to start construction of that project and this year, mid of this year. And as George mentioned in much more detail already, the acquisition of Lerta that is reflected in our financials The acquisition has happened that we took over control and start consolidating Lerta as of the end of the year. So the impact on the P&L is basically zero, but you can see it already in our balance sheet, which I will show you in a second how that looks like now after the integration of Lerta. From the key performance indicators, as mentioned, our portfolio at the moment is 92.9 megawatts that is generating electricity. On top of that is this 31.5 megawatts, which are to be added in the upcoming weeks and months to this portfolio. Majority of that and the new 31 megawatts will be clearly merchant oriented. So you can see from the 92 megawatts, 76 almost are already merchant exposed. Only 16 megawatts have a feed-in tariff still. This portfolio generated last year 121.6 gigawatt hours of electricity, a growth of 17 or almost 18% in output. Majority of that is merchant oriented. Since we only switched in April, you can expect that from that even this year more will be merchant oriented, harvesting the higher electricity prices, which you can see in the right bottom corner that we have had last year quite significant increase in average revenue per unit because of this merchant model in the Czech Republic with 805 euros. On average. This is the green bonus included there. So this is some 500, almost 590 euros is the green bonus. The rest is electricity price. In Hungary, we harvested 288 euros on average, and in Australia, 107 euros. In the remaining feed-in tariff parts, you can see the much lower prices in Hungary with 94 euros compared to the 288. In Slovakia, we have the 260 euros feed-in tariff, which is running there until 2030. And that's roughly what goes then into our revenues. And this, I'm very happy today to present you those figures because not only Q4 was a record year for a record quarter for us as a last quarter in a year, but this ended also the full year as a truly record year for Photon Energy, with total revenues for the full year being 94 million euros compared to 36.4 million a year ago. So a significant growth by almost 160%, 2.5 times the revenue. In Q4 only, we could grow from 11.7 million euros to 26.4 million euros. Also a significant growth of 125%. As you can see, electricity generation is a significant part of these revenues, however, becoming a smaller part of that overall revenue mix in our company. So from the 94 full year revenues, 35.2 million were from electricity generation compared to 19.4 million a year before. So growth still of 82%. As you could see before, 18% of that is additional gigawatt hours produced. The rest is our merchant model and the decision to switch to the merchant model, generating much higher average revenue per units. We can see the same effect in Q4, where we even had lower energy production compared to the previous year. Nevertheless, due to the higher average revenues, we could grow our overall revenues from 3 million to 3.8 million. So also here 27% growth. All that goes through to our EBITDA, where we had for the full year a record EBITDA of 24 million. Here we have basically fulfilled our guidance that we gave, actually our revised guidance, because originally our guidance was that we would come in with some 18 million. We have upgraded that to 24 million and delivered those 24 million, a growth of 151% for the full year compared to last year, 21. If we look into the fourth quarter, also there a growth of 17.3%, from 1 million to 1.2 million. Here again, important to mention that there is certain seasonality in our business, as you might know, that Q1, Q4, we still have in the electricity generation much less than in Q2 and Q3 here in the Northern Hemisphere. This is a little compensated by our Australian business. We can see with the other revenue streams that account more and more in our revenue mix that also the seasonality will be compensated more and more. We can see this, for example, in the demand response from Lerta, where we can see in Q1 and Q4 more revenues to be generated, and also in other activities like trading, EPC, and especially also the O&M, that there is not such a strong seasonality. But coming back to the overall numbers as such, the significantly growing EBITDA is also then going down to EBIT, even though we had some increased depreciation clearly from additional assets coming in there. For the full year, we come in with 14.5 million after a negative EBIT last year still of 700,000. So a significant, not only a turnaround, but a significant growth. Even in Q4, which was negative in 2021, we still have a negative EBIT of minus 355. Nevertheless, it improved and is almost half the amount from the previous quarter. The whole line goes down to net profit. And this, I think, is the also important message that we have been asked very often in the past, or when we turn around, when we turn positive. So this is after tax profit for the full year of 2.8 million. We are there coming from minus 6.4 million a year ago. And then just the bottom line, total comprehensive income. As you know, we have on the one side revaluation of our power plants that we built ourselves, which is reflected in there. This was this year very minor because of only connecting 1.4 megawatts in Hungary. There is also some foreign currency translation differences in there, which were unfortunately this year negative. Last year, they were quite positive due to the development of the forint and the Czech crown, mainly. And then we have there as well our derivatives that we have on our financing, which have this year very positive value as well, so that we come in with a total comprehensive income of 4.3 million almost, compared to 2.1 million a year ago. And that number goes directly into our equity, where I will go directly then to the balance sheet and see the changes there. As you can see, our balance sheet has grown quite significantly from 200 million or 197 million a year ago to 240 million, so by more than 20% overall asset base. As mentioned, there is reflected in there on the one side our organic growth from power plants that you can see mainly on the fixed assets, which have grown by the assets in progress in Romania mainly by 24.7 million. On top of that, we also realized by the acquisition of Lerta intangible assets for the values that are in the company there, mainly attributable to the demand side response and the licenses that the company has in all the markets where we are active, the trading licenses, which are reflected in there, so that our fixed assets are growing from 142.5 million to 171.5 million. Our current assets have also grown quite significantly from 14.8 million to 47.7 million. That's mainly related to our procurement strategy. We have grown our inventory quite a bit. On the one side, procuring components for the trading activity, which has grown significantly in revenues this year, and is also foreseen, or last year, and is foreseen for 2023 to continue to grow quite a bit. And we also see, we also have secured already capacity for our own portfolio, where we have roughly almost for 10 megawatts of capacity, the components secured already and on stock, so that we can roll them out this year without any dependencies on the supply chain. That's on the active side. On the passive side, our liabilities have grown as well. As I mentioned, we have refinanced not only our green bond, but also our Czech portfolio long term. those two effects let our long-term liabilities, non-current liabilities, grow from 111 million to 150 million. And on the other side, our short-term liabilities went down a little. That is on the one side that we have fully repaid our previous bond from 2017 to 22 that was out there, that we repaid on 27th of October fully. On the other side, that number increased a little by, we also have a very small, it is a Czech crown bond outstanding, which is due this year on the 13th of December. There we have about 3.1 million, which has been reclassified from long-term liability to short-term because it's due within 12 months. That brings me to the basically gap between liabilities and assets, our equity, that could be grown quite significantly from 51.5 million to 60.5 million, a growth by 17%. That is mainly attributable to our positive result, the total comprehensive income, and on the other side also to the treasury shares we have issued, which we had basically on stock, which we have issued for the transaction for with Lerta to acquire the company. As the balance sheet, in the current assets, we also have our liquid assets, which went down a little. I will explain you this best on the cash flow statement. Our cash flow statement is from the operating result. We had a very positive operating result, as you can see from the income statement with the EBITDA. Nevertheless, there were, as mentioned already, from increase of inventory and with the growth of the business, also receivables, payables, that we can see that there was a negative working capital effect that is decreasing overall operating cash flow to 3.7 million, but still quite substantial positive number. We have been heavily investing in those projects in Romania mainly, but also the acquisition of Lerta is reflected in the investment cash flow now, and that number is then compensated by some net effect on the financing activities, as mentioned, the bond, the Czech portfolio on the one side, plus we had some repayments, regular and early repayments in Hungary, plus we had the full repayment of our Euro bond, the old Euro bond there, that we are coming in at the end of the year with pure cash, that is without restricted cash and without the other liquid assets that we have of 11.3 million euros as of the end of last year. Yeah, this is roughly the overall picture of our cash flow, and this brings us then, I think, to the outlook for this year. And here I hand over to George, maybe, to talk about our guidance for 2020.
Yes. And as I present to discuss the outlook, this should also answer one of the questions about on what basis this forecast has been prepared. So the guidance we published yesterday is that we plan to grow revenues from the 94.2 to 150 million euros, and to grow our EBITDA from the 24 million this year to 29 million. Actually, the question I think that has been placed, which is asking for the basis and what the energy market prices we have been assuming, indicates there is, of course, and as we were setting, as we are planning and as we also setting the parameters of this guidance, there is a lot of moving parts, and energy prices are one of them. Clearly, there's where we can take certain guidance from, and I mean, what we do is we take guidance from the futures market on the EEX for the inter-year pricing curve, which of course also changes every day, and these expectations have, I mean, this curve has been falling since the high in August last year. Even since the beginning of this year, we've seen a reduction in that expectation. But of course, in addition, we also had the price caps and other extra measures taken in the various countries. So there's a lot of moving items, and I would say it has definitely not been an easy exercise, and also more difficult than last year, where we came with a guidance of originally 18 million, and as market prices went significantly higher than what we initially anticipated, we adjusted it upwards and basically hit that forecast. I think I would also like to add that in the fourth quarter, the results, I mean, both in terms of revenues, but also EBITDA and all the way to the bottom line, we were actually expecting to be somewhat better, but in the fourth quarter, energy prices, particularly compared to the third quarter, had come down very significantly, but also at lower production volumes. So so we were below the forecasts. So it's not only sensitive to prices, but also to volumes. Had we had the expected volume, the numbers would have immediately looked significantly better. But so forward-looking, electricity generation revenues and the EBITDA they generate are, of course, the starting line for our outlook. There we are adding new capacity shortly, plus beyond the 31.5 that we are in the process of commissioning in Romania. We're planning to build more megawatts and more power plants in Romania later this year. Plus, we expect also some additional additions of capacity in some of the other markets. So as opposed to last year, where the generation capacity grew only marginally, this year there will be a significant increase in installed capacity that will drive this. And even if the average selling price ends up being lower than what we had last year, that should be, we would hope, more than made up, but at least compensated by this increased capacity. Then secondly, the green bonus that we receive in the Czech Republic is, I mean, for this year was somewhat lower than the year before. However, it is still a very significant number and is not related so it's independent of the current market price level. And also in Slovakia, we are still on the feed-in tariff, so there's been basically no change. So yes, forecasting revenues for energy generation have been difficult. We've tried to be, as usual, reasonable and conservative. But of course, there are some nightmare scenarios where they could be lower, but we also see certain upside. And actually, just reading the news in the last couple of days, this is a very dry winter, so there are already concerns growing that hydro may not be providing as much electricity as usually at the end of the first and beginning of the second quarter, so during the spring, and then these low water levels may also have an impact on generation from nuclear and coal-fired assets, as has been the case last year in France, very famously, but also in Poland. Actually, for the last couple of years already, there have been impacts on coal-fired generation. So we will see. We are comfortable that based on current price levels and the forward curve on energy generation, we have a solid base case. But a lot of the growth will, of course, come from other business lines. So last year we had a very significant increase, a fivefold increase in revenues from technology, and thanks to the composition of our merchandise, we also managed to increase our gross margin, and we expect it to continue. So while we don't expect a fivefold increase in the business volume of technology in terms of group external sales, we still see quite a bit of upside and a significant contribution to group EBITDA. And what we expect this year is to see very dynamic development in the provision of EPC services for external parties, and that will span across behind the meter installation, so basically rooftops, all the way to utility scale projects. So that's from a very small base across the group, and actually most of those revenues last year were generated in Australia. We expect that number both in terms of revenues and profit contribution to be at a fundamentally different level. And then of course we have the revenues that are and contribution margins driven by Lerta. So clearly the capacity market, where, and this is public knowledge, the expected revenues or the contracted revenues for demand side responder services in the Polish market account for almost 8 million euros, 7.7, and with a very healthy contribution margin. So that is of course a significant improvement also against what Lerta had last year. And then we have electricity trading, which has been developing quite dynamically, and is also an area, and I think it's also important to note, our business lines generate different types of revenues and with different value, because they have different margins. So in electricity generation, EBITDA margin is 90% and more in most cases. Whereas on electricity trading, the margin, for example, the margins are very small and rather percentage points at the moment. There's also in the Polish and Romanian markets, those margins are actually capped at a very low level. That's, for example, not the case in Hungary. But then, for example, on providing the balancing services, and we are very happy with how well our forecasting is working. So the margins at the moment there are also very healthy. Then we have the trading of components, where last year we managed to be in technology, where we've been able to generate gross margins materially above 10%. But it's of course a different revenue stream than electricity sales. So this 150 million is composed of many different types of revenues. In O&M, to earn 1 million euros in revenues, there's a lot of people putting in a lot of effort, and there's a lot of work. In electricity trading, you can theoretically do a turnover 1 million euros by buying and selling with one mouse click. So which is of course not something we are involved in, but it's just to show that actually the revenues, we really need to look at the different types. So 150 is a number that we feel comfortable with. What is of course important is the EBITDA, and there we expect to compensate any impacts of lower energy prices compared to last year with higher generation. We believe that particularly now with this weather pattern, that energy prices across the year may actually be higher than what is indicated at the moment. But that would provide a positive surprise. But it's mainly about new capacity being added and more significant contributions from other business lines. And of course, those that are now part of our group through the integration of Lerta. So we are comfortable with these numbers. But as we were preparing this guidance, it was a bit more difficult than last year.
Maybe also just once more to add here, when we talk so specific about electricity prices, the electricity revenues are accounting or have accounted in 2022 for about 37% of our overall revenue. In the forecast, in this 150 million, that percentage will go down. So also the importance of this revenue stream, I mean, not about EBITDA, it is contributing a lot, but on the revenue part is also getting less and less, and other revenues like the business from Lerta, which is adding there, will become more important. plus our technology trading as well will add more and more to this revenue mix. Good.
Well, there's a follow-up question whether we can be more specific on our target for 23 in terms of new capacity installed. Well, we've published a guidance target for the end of 2024. So at this point in this forum, we cannot be more specific in relation to this year. But I think when you look at it's not in this presentation, but for example, in our monthly report, by the way, the one for January will be published after business hours today. And you look, for example, at our Romanian pipeline and at the stages, it will. Do we have it in here?
We would have it.
Sorry, we have it in the.
No, sorry.
No. So there is significant additional volume of projects that are at an advanced stage, and we will be. I think this much we can say is that we'll start construction of the next batch of power plants at the beginning of the second quarter. And this is, I think, what we should also mention is that with the publication of the annual report, which will be in April, we are planning to update our medium-term guidance, which at the moment is for year-end 2024. And there, I believe we will be more specific in relation to installed capacities. What we can say is that the Romanian market is new to us. It's actually a market that has now woken up from an 8-year freeze, and it is also a market with a surprisingly large amount of red tape. So in combination with supply chain issues generally last year, particularly related to transformers and so on, we have picked up a bit of a delay against our original plans. But the upside of this is that we have managed to fine-tune our processes, also our supply chains in the Romanian market. So with the next batch, and as we continue adding capacity there in the next quarters and years, we believe that things will go a lot faster. And secondly, this year and next, at the very least, Romania will be probably one of the most red-hot PV markets in Europe because of a lot of pent-up demand. And we are getting ready. So the experience that we have now gained, we believe, will allow us to grow very dynamically in the provision of EPC services to third parties, and that extends both to utility scale, where we see a lot of because at the moment we are also perceived as one of the first, if not the first major player to commission a large number of assets. So we see a lot of other investors coming to us, and so we believe we can win some EPC business there. But also for behind the meter installations, Romania has what is at the moment the best framework in Europe. So up to 400 kilowatt peak, a rooftop installation does not require a construction permit. And if the energy user has at least 400 kilowatts of capacity on the download, they can also build up to 400 kilowatts. So basically, 400 kilowatt rooftop installations can be built with minimal paperwork, and they can benefit from a net metering mechanism. So something that was used in other markets some time ago and helped drive PV very dynamically, like in Poland. Actually, about a year ago, that was changed to net billing. So that what has helped in other markets now is available in Romania. So this is an amazing window of opportunity, and the demand for rooftop installations is white hot. So Romania is a market where we expect a lot of activity, and we have been, and we continue building up our capacities to serve this demand beyond our own rollout of plants that end up in our portfolio. So maybe let's go through the additional questions. So maybe let's because one of the questions, so maybe let's address them one by one then. Mm-hmm. It's all about expectation from Lerta outside Poland. So so first of all, this year this 134 megawatts of DSR are creating a situation where Lerta will contribute positively to our group results at the EBITDA level. And as I mentioned at the beginning of the presentation, basically the next thing for us that we're focusing on is the auction, the additional auction for next year, where the goal is to grow market share and to win at least 300 megawatts of contracts for next year. The demand by the TSO, Polish TSO, is there. So then the question will only be at what price this will be contracted. So that will be a significant growth for next year. But we now have it. So as we have the new energy division, which is Lerta plus our behind the meter, and we are building up capacity in particular to address this demand behind the meter. So with simple, ranging from pure and simple EPC all the way to complex services, including energy trading, energy supply, and the monetization of flexibility. So this is something that's ongoing, and our pipelines of behind the meter projects or new energy division opportunities is growing very dynamically in Poland, but also in the other markets where and this was the nice thing about this integration process with Lerta, which strategically actually in terms of market focus started some time ago, that we have footprints that we are able to combine very, very quickly, and teams that we're able to combine very quickly. So clearly in all the markets, Poland, Czech Republic, Hungary, and Romania in particular, as I mentioned before, there's a lot of opportunities. So from that point of view, Lerta is definitely going to contribute very significantly, also outside Poland. And with respect to, as I also mentioned before, in terms of DSR, I wouldn't want to say that the world is our oyster, but we do see a lot of markets opening up, introducing market mechanisms that where the virtual power plant can be used very, very effectively with very little additional investment. So in terms of software, very little, but I know if, for example, we wanted to enter the Spanish DSR market, we would of course have to set up an office and have a few salespeople. But we don't have to. We're not a startup that has to first invent the software. We can just leverage what we have. I think there was a question also in relation to storage capabilities. So our plans. So first of all, we have experience and a track record in relation to storage in Australia. And actually, the follow-up question includes that. So we have built our first hybrid project back in 2014 in New South Wales, which to this day powers a radio antenna and has been working and continues working. Then we had our project in Lord Howe Island with 1.3 megawatts of PV and 3 megawatt hours of storage, which we integrated into the island's power grid and paired it up with their diesel gensets. And we also acquired this project in a place called Bogabri. Those Australian names are sometimes funny. And this project we bought from a developer who developed it as a hybrid project. So the parameters are that grid connection is just below 5 megawatts AC, That is important because that keeps us outside the bracket of so-called scheduled generators. So we can basically sell into the spot market very easily. Above 5 megawatts, it gets very complicated. And at the moment, our plan is to install up to 9.8 megawatts peak of capacity on trackers. So by design, in design, very similar to what we built in Leiden, just with an even higher overbuild ratio. And we're planning to install 10 megawatt hours, may end up being even more. So that's now a question of sizing, which is driven by the market potential. And most likely this will be, or this will probably be a DC coupled setting, so that we can actually salvage the what will otherwise be the clipping losses if we had an AC coupled solution. But the final sizing will be a function of the revenue model, and this actually leads to a key question that is also relevant in Central Europe. And also to the question of storage capabilities. So storage capabilities is clearly that has an engineering dimension, where we have people, but we are also looking at expanding our team there. But what is becoming but that is just part of the solution, or part of the issue. The other issue is that that the regulatory frameworks in different countries in relation to storage, whether that's in a hybrid setting or behind the meter or utility scale or standalone, are different, and the changes are quite dynamic. So just staying on top of what is possible in each market and what services, for example, can be provided is already quite a bit of work that then has very often was an impact on the engineering solution, which may have an impact on the development of this project and the permitting. But what comes on top is then, of course, the business model. And I mean, as a general rule, and this is, as I mentioned also today already, very much at the core of our joint vision with the founders of Lerta, that storage is of course the game changer. But in a grid connected situation, so as opposed to, for example, Lord Howe, which is a remote island that has its own grid, but and only now two power sources. So in a grid connected setting, today, using batteries only for load shifting is not enough. So that will not provide an adequate return. If we add and start using the battery for arbitrage in the market, it makes the situation better, but it's typically also not enough. So in order to really get the maximum out of a battery investment and to make it viable, you need to be able to have a very the widest possible revenue stack, and that means revenue streams from and what typically gets it across the line is if you can provide flexibility and support, for example, balancing for a larger portfolio, if you can provide and then if you can provide ancillary services to the grid, and that typically gets it across the line. So, but also that needs, you need to have people who don't understand the technical side and the regulatory, but also the financial. And we're working on our own models, but also in certain situations with outside advisors and consultants to properly define and evaluate create the business cases for investment into storage. But it's definitely the direction of travel. By having added the capabilities of Lerta, we are in a much better position to evaluate. But then also, what is at least as important is to execute. That means to really then sell those ancillary services, for example, in those markets where it's possible, and actually realize those revenues. It's one thing to have a business plan that says, look, these are the revenue streams, but then you still have to have a partner or the capability realize those, and this is where we are today. So storage will definitely become a massive topic, and we are increasing our capabilities, which are technical but also regulatory and financial. And I think that, and in our review of our medium-term targets, there will be a lot more language and details about our plans in relation to energy storage.
Okay, the next question is about financing and about the bond, and if it's not, how long you will rely on financing through emission of bonds, and if the amount of 77.5 is not too much already. I mean, one thing is we are very carefully generally in our indebtedness. Therefore, we have also given for the bond a governance that the adjusted equity ratio consolidated for the group shall not go below 25%. So we stick to that very clearly in the whole financing mix, basically. As you might know, our financing sources so far have been purely the bonds that we have issued on the one side. On the other side, the long-term non-recourse project financing of our power plants. And this mix together shall be not more than 75%. At the moment we are at 29% equity ratio, so we are at 71% indebtedness ratio from that point of view. The amount as such, so I mean we see the bond financing as a at the moment for investors attractive opportunity, but also for us. So continuing with bond financing as such is part of our financing strategy. For sure, we carefully monitor the absolute amount because of the bullet risk, so to say, on the when it's for repayment. We see some headspace there still generally with our expected growth on the one side. On the other side, we clearly evaluate also to split this in different bonds with different durations in the future as well. So this is the first. The other question, then there was also once more about Australia, as I think George has mentioned, is already very detailed. I also mentioned before, just to reiterate that we expect that project with the 9.8 megawatts that you can see in our pipeline and the 10 megawatt hour storage to be constructed, built this year still in Australia, middle of this year that we start construction. And could you reassure you want to add something there to the next question?
Well, I think on the question about the bonds, so the bonds are an important part of our financing mix, and I think what is important, and we should stress it again, is that in the second half of last year we made sure that all the financial debt that we have in the group, so that is at the level of the project, but by definition also the bond, because it's a fixed coupon bond, they are all fixed. fully fixed, fully hedged in terms of interest rates. And given the inflation environment, when we look at our cost of debt, I think we are at a level that is reasonably comfortable. Inflation rates are significantly higher. I mean, our expectation is maybe slightly less sanguine than some market participants have. I believe that inflation will stay higher for extended periods of time. So in such a situation, debt is not bad. And particularly if we through our merchant strategy, we can benefit from the price development environment. Of course, it needs to be managed. We have very strict covenants in the bonds, so to which we adhere, and always try to keep a buffer. But it's not some. Clearly, we'll also look at the maturity structure going forward. But we have invested a lot of time and effort into our position on the bond market, and we believe that now after essentially 10 years, we have built up a very good reputation. And given that our bonds traded on par, a 6.5% yield to maturity for an unsecured bond actually implies quite a high level of confidence into Photon Energy as an issuer. by the market. So I think this is a quite a good situation and position to be in, and this is why clearly the bond market will remain an important part of our energy mix, and just increases our level of flexibility as we will mostly rely on project level financing and the bond market. So yeah, that's so coming to the next, there's a question related to essentially the lockup of the founders and of Lerta. Well, of course, we don't want to divulge all the details of the transaction, but I mean, there is, and I think the language we used is that there has been a lockup applied. There is, I think, so much we can say. There is a performance test that relates to the year 2025, and the numbers and the results of the new energy division in 2025, which will be known in 2026, are quite important. And until then, there's a significant lockup mechanism in place. I think this is how much we can say, but also what we'd like to say is that, and I think that the two founders who remain instrumental in the business line, I think share our long-term view. And so there's not one of those situations where a company gets bought and the founders want to leave as quickly as possible. But they have taken a very significant and highly above average share of the compensation in Photon Energy stock. So that just shows that this is a long-term issue and long-term approach. There's maybe a question related to the intangibles.
To the well, first about EBITDA and net income margins did not follow revenue growth, especially in Q4 22. Yes, that is, but I think we have already explained a little before. It's very much attributable to the revenue mix. So we have in Q3 very low, high EBITDA revenues from electricity generation with an extreme high EBITDA margin, as George mentioned before, up to 90%. On the other side, and also if you look at the overall numbers for the full year and compare this with last year, you can see that this revenue mix, more and more revenues are coming proportionally from other services like technology sales with lower margin, like engineering business, which has also lower margin than the electricity generation, but also is not that capital intensive, but we also have to mention all the time here. So this is the explanation for that. Regarding the Lerta acquisition, the intangibles are depreciated. This will start this year, basically over lifetime of the underlying, how to say, business, which is either, as mentioned before, this is the capacity market, this is the contracts that we have there included, and on the other side, on the trading, it's between the different trading licenses. So this will be starting as of January this year to be reflected in our depreciation. And then I think we have Ukraine.
Yeah, there's two more questions. One is whether we have any plans to participate in the rebuilding of the Ukraine electricity generation. Well, I mean, the situation is as it is. And I think at the moment the conditions to safely enter that market are not there, at least for a company like ours. On the other hand, in our utility scale division, we have very deep colleagues with very deep understanding of the market, and should the conditions improve to the point where this is a from all points of view, not only economically, technically, and also from a safety point of view, a rational thing to do. That means address the market and look for opportunities. Then we remain open to do so. But I think for that, we needed to see a significant change to the status quo in terms of what is unfortunately going on in Ukraine. So definitely not in the short term, and it's not like we are queuing at the border waiting for things. I mean, there's a lot of issues, but we have an understanding of the market, and if the opportunity is there, we will definitely look at it.
Maybe, sorry, I forgot to. I can just see now that there with the amortization was also a question regarding taxes in Q4. Yes, we have. I mean, generally, and in this year was an extremely profitable year, as you could see. So our projects, our SPVs in the past generated profits, but now with the merchant model, much more. So there is a higher tax burden coming from that side, from this high income. Plus, we also, and this is especially in Q4, the construction business that we do, and also when we build our own power plants, this is arm's length. So our EPC earns money by doing so. So there is also high profits coming from that side. This is why overall for the full year, then the profit, the tax burden is much higher compared to last year.
Okay.
And the last thing.
The last question is state of affairs of our 300 megawatt peak region project. So before I get to that, I think we can provide an update on the pilot project of region in Carwarp. So the generation part has been operational and supplying electricity to the grid already for a few months. And based on our current information, the entire system, that means including the storage element and the ORC engine that generates electricity from the heat difference, should be ready and soon. And at the moment, we expect that in March there could be the commercial operation commenced of the entire system. So, which is very important because, of course, a functioning demonstration unit is something that is then also crucial for our own efforts to finance the project. So that is coming. There we are already very close. And in terms of permitting, at the moment, nothing has changed that would lead us to change our previous announcement or guidance or expectation that we hope to be technically ready to build. That means have all the permits by the end of this year. And but as soon as we have as Carwarp is ready to operate or fully operational, that's when we want to start in earnest the effort to put together the financing package, both in terms of what may be available in the form of some Australian subsidies, equity and debt. And of course, when we can take equity and debt providers to a functioning power plant and show them how it works, that exercise will be a lot easier. We have already selected a financial advisor to help us. So basically, we're now waiting for this commercial operation of the Carwarp project, which, just as a reminder, is 4 megawatts of generation capacity, 3 megawatts of grid capacity, and 50 megawatt hours of storage.
Good. I think then we are through. If there is no more questions, we ran over time a little.
Yeah.
Thank you very much for your time.
We, of course, we are available for follow-up questions by email. So please send them to ir@photonenergy.com. And well, we're looking forward to welcoming you to our next month.
In 3 months, in next quarter call, which will be around this time in 3 months. Thank you very much.
Thank you very much.
Goodbye.
Bye-bye.
Good day.